It's inflation day. What's the market going to do, and what do you need to know before the bell? This morning, inflation numbers are coming out, and they're expected to come in softer than what the headline says. Now, of course, this is going to get the bulls all excited because now weaker CPI print, if that is the case, would suggest that the Fed may be closer to done than not. Right now, we're back into the pivot scenario for the Fed. Of course, the Federal Reserve has been very clear that they're not going to pivot anytime soon, but yet the market keeps hoping, right? We keep hoping that the Fed will stop hiking rates here soon and go back to cutting rates and doing QE. We'll see what happens. Technically, the markets are already performing fairly well. We had a trifecta of events last year which lead to a better outlook for the market this year. You had negative returns last year, followed by a Santa Claus Rally, just barely, and then the first 5 days of January have been very positive. So historically, 100% of the time that this has occurred, the full year returns have been positive. So there's the good bullish news for you this morning. Markets have been rallying here over the last few days, getting above the 50-day moving average. Next level of resistance is now about 397 on the SPY. That's about 3,970 on the S&P 500 index. We've been above the 200-day moving average before. Back in late November, early December, we broke above that 200-day moving average on a CPI report, on a Fed statement. Got above that 200-day moving average, failed, went back below it. The difference back in December was when the market did break above these 200-day moving averages, we were on a MACD sell signal at that time, suggesting lower prices, and that's exactly what occurred. This time, the market is looking to break above the 200-day moving average on a newly registered buy signal. So this is going to potentially give the market more lift. So a rally up towards 4,100, 4,200 on the S&P is not going to be out of the question. And that's also going to give a pretty good lift above this 200-day moving average and this downtrend line that we have going back to January of last year. If that occurs, that's going to be a fairly bullish outlook, at least intermediate term, for the markets. So again, you could see a rally that then persists March, April, May, before we kind of get into the next leg of much weaker economic data, which will likely show up this summer and potentially provide another downdraft to stocks. So again, we could wind up having a stronger first quarter than expected, and then again later have to deal with weaker economic data and of course what the Fed is going to do. Again, all this is going to be dependent on what the Fed does from this point. Every time we've rallied before on weaker CPI data, the Fed has been very clear that they are not going to stop hiking rates or reducing quantitative easing, backing down markets from that point. So again, don't be surprised if we start getting some hawkish statements from the Fed on a rally, because the Fed wants tighter financial conditions, not easier. And that's what these rallies do. So again, be cautious here. Again, bullish setup short term. Technically, things are improving, so we want to keep some positioning in portfolios right now. We did add some positioning in our portfolio over the last day or so in anticipation of this report. We'll see what happens today. We've got very tight stops, so if the inflation number is stronger than expected, market sells off, we'll get stopped out. But if it's weaker, markets rally. We've got some participation there on a trading basis. But for now, markets are trending higher before the report. I'm Lance Roberts, and that's what you need to know before the bell. And I had it right the first time. And that's what you need to know before the bell. Okay, I got it. It's inflation day. What's the market going to do, and what do you need to know before the bell?
Perfect.
Perfect. It's like living with my wife.